Hey guys, Hitori here. Welcome to the seventh episode of the weekly market outlook with TRADEXPROP. In this episode, I'll be covering the dollar index, gold, and the S&P 500. All right. Well, we've been doing this for 7 weeks now. That's crazy to think, And in this episode, if you do hear my voice kind of, turn raspy or I sniff or I cough, I do want to apologize because I feel pretty much under the weather. I've been sick for the past 2 or 3 days. It's been quite horrifying, and that kind of sucks because actually during the weekends is when I like to just have like intense backtesting sessions of like 2 or 3 hours, in the afternoons. But I can't do that because I am sick, and I trade ICT concepts, and that is a discretionary system. So unless you have a mechanical system, I think you're good to go. But if you trade anything other than a mechanical rule-based system, I think you kind of can't backtest when you're sick, or you can't even trade when you're sick. And I think as traders, you kind of have to understand that you have to move away from the charts or give up on trading opportunities when you're sick, because you won't be able to perform at your highest, right? So, well, even though I'm sick, I waffled. Within just 1 minute of recording, I can hear my voice becoming a bit more raspy. So I do want to apologize for that, right? So, all right, let's get straight into the video. All right, so first off, we have the dollar index on a monthly chart, right? So we are in the final week of the month of May. So looking at where we are currently, we are within this bullish, I don't know why it says FBG could be. Yeah, we are within this monthly inversion fair value gap, or also actually a BPR, right? Oh, this is actually the monthly. Yeah, so this is that level right here. This was a bullish fair value gap, became a bearish BPR, and now it is a bullish inversion fair value gap. Right, so for this entire month, I was looking at this level, right, as a potential catalyst to go higher into the higher levels up above, right? Maybe into this monthly swing high, deeper within this, bearish fair value gap right here, right? We are hovering just a bit around 50% of this monthly swing low to swing high, right? Because if we zoom out, this is the most recent external range that we're in. But because it is so big, and when you have such a large range like this, it is going to take a long time for you to reach your discount and premium levels. So you have to understand the concept that within larger ranges, you have smaller ranges to play from. So this is my smaller internal monthly range right here, from this swing low to this swing high, right? So as of now, we are currently within this monthly inversion fair value gap, and based on how far away we are from the monthly open, and based on the time that we have left for this month, as of now at least, I'm not expecting price to kind of push back all the way above the open right here to turn bullish, right? Even though I am still bullish on the dollar on the monthly chart, right? I am still bullish, but as of right now at least, I'm not expecting us to go push up all the way higher. I am, however, expecting the monthly to lift a lower wick down here, showing rejection off of this inversion fair value gap. So with that being said, I'm not expecting price to close below this level, right? So that is all we have on the monthly. We don't really have much information as of now. So let's drop down onto the weekly right here. So on the weekly, this is basically the current weekly range that we are in, right? We have this swing low, impulse that took structure, swing high. If you zoom out on the weekly, this would technically be our weekly external range, right? And this is also the monthly internal range. So it gets kind of confusing, but once you start to understand that external and internal, and everything is kind of done on the weekly and daily time frames, the monthly kind of falls into place, right? Because you can try and predict the monthly candle, right? However, you could have a lot of troubles utilizing that multi time frame analysis, dropping from the monthly to weekly to the daily and then to your intraday entries. It could get pretty confusing. So if you are starting out to incorporate different time frames, I would say use the weekly and the daily first, right? And once you are better at that, you can then use the monthly if you want to, right? Or you don't even have to use the monthly at all. You can just stick purely to the weekly and daily. That's fine. I just personally like to use higher time frames like the monthly or even the quarterly and half yearly. But I don't really look at those that often, right? Like week to week, not even once. Like month to month, then yes, but just monthly is pretty much the highest I'll go on a week to week basis. All right, so here on the weekly, last week I expected price to push lower into this weekly fair value gap here, right? I want us to come down here to potentially push higher on top, but we didn't see that last week, right? Last week we saw price come up to rebalance this low right here, that weekly rebalance, and then price rejected off of that. So for last week we didn't really get that because I wanted us to come down here so that we could leave a weekly bearish fair value gap to then push up above to use it to go higher into this swing high and this equal highs right here, but we didn't get that. As of now though, quite frankly, on the weekly we are in a way bearish on this time frame, right, on this pair, so this asset class, the dollar index, right? So because of this rebalance, right, currently we do not have any imbalances to fill, so once we have filled this imbalance, all right here, technically the market should now in theory come down to take liquidity or fill the opposing end of this imbalance right here in this form of a busy. But that contradicts with my monthly because I want us to stay above that monthly inversion fair value gap. So it's kind of if this happens, right, we kind of see a contradiction between the time frames. They're not aligning, right? So when this happens, I tend to just class everything as a low probability day or week or time period, and I just try to refrain from taking any impulsive trades because all of them are not lining up, right? The weekly, based on this picture alone, I am bearish into this weekly fair value gap, but the monthly I do not want to see price go lower. So depending where we trade, right, we do have this previous week's low right here. If we trade lower at the start of the week and we take off this liquidity out, right, we could see price go higher from here, right? That is the ideal scenario. We want to see that low being put in first before going higher. That is the ideal scenario for next week, right? If we start trading higher, I might just say, you know what, that looks pretty sketchy. I might stay out for now, right? So for next week, I'm still expecting the market to come down lower on the weekly. So let's see if there's anything on the daily that we can use that to confirm with, right? So this is the daily on DXY, right? Last week, I highlighted that I wanted us to see confirmations if we break or respect this level right here, right? So we have this bearish FVG right here, this CB. Monday was here last week, right? And then we were kind of ranging, just testing and ranging within it. So I wanted us to do either one of two things: to displace away from it so we could look for shorts down into this level, or for us to break above it, come back to retest it, and displace away, right? So we did see the closure on Thursday with this really convincing wick that filled all of these imbalances. However, on Friday, we took out previous day's high and then came all the way down into here. So this really threw me off because I wasn't expecting this at all, but it happens. So right now on the daily at least, I need some confirmations, right? So this is Monday that marked previous week's low. I need to see if we come down to take this out to reverse higher from here, or we could even come up, take this to go lower, in whichever happens first, I am likely to be bullish or bearish for that week, right? So ideally, I wanted to align with the monthly, so we come down here, take this out, go higher, right? But as of now, it's hard to say. So on the dollar index, I am sitting on my hands until either happens, but we could have a clue using the econ calendar right here, right? So this is in New York local time, right? So here we can see a roadmap, kind of like we have Monday, which is a bank holiday for the US dollar, so likely going to be a rangy day or not much volume or protracted in one direction day, right? One direction, okay. So Tuesday we do have a high impact news, consumer confidence at 10 a.m. but it isn't really a main mover for me. Like comparing this with things like PCE or unemployment claims or things like CPI, FOMC, NFP, this isn't really a high impact news for me. So I wouldn't really class this as a potential high moving day, but of course it could happen. It is still a red folder news, right? So Monday range, Tuesday we could see some movement in the markets, no news on Wednesday, and Thursday and Friday is when it starts to look really clean, right? We have unemployment claims, right? And Friday we have core PCE. So I expect a lot of the weekly range to be made within Thursday and Fridays, right? So we could see Monday, Tuesday, if Monday ranges and Tuesday manipulates where I want it to go, we could see that distribution during Thursday or Friday, right? I mean, likely Thursday if possible. So Friday we could either play TGIF or we could see a classic buy or sell week profile, right? So really basing this on, I already can see that Monday is going to be a no trade day for me. I mean, I don't really trade Mondays either way. Tuesday, I might consider it, but Wednesday, no news, so we might have to take a look at that. Thursday and Friday might be the days that I want to be looking at the market for either a change in direction or, you know, just a clearer picture on how the week is likely to expand, right? Because as of now, I don't really have a clear picture on where it's likely to go, right? We could take previous week's high first, or we could take previous week's low first, right? Depending on how we trade within this inversion fair value gap, right? So if you break below here, this is no longer a support. I wanted to form new supports after taking out sell side liquidity, right? So just keeping that in mind. Next week might be a bit hard to decipher, and I'm being honest with you, like there are weeks where, like this week, I don't know where price is likely to head, right? If you look back at my previous outlooks, things were pretty clear cut, right? It was either I had a clear bias and that bias played out, or I had a clear bias and I was proven wrong, like up here, right? When we came up here, I was sure that we were going to take it out like this pool right here because it was so equal. But as you can see, since then on, we just started to tank all the way down, right? So I saw this move as a external to internal to external move, right? And as of now, we don't really have that confirmation that that's going to happen yet. So for next week, I'll be completely honest, I don't have a clear bias, although I am slightly leaning towards a bullish side until this level is violated. You know, I'm still bullish, but at the same time, I need this placement away to confirm my bullish bias on from this support right here. So that is my forecast for the dollar index, right? Let's move on to everyone's favorite pair, gold, right? Also known as the account blower. All right. So on the monthly for gold, not really much. We're still making all-time highs. We took out last month's high, which is the previous all-time high, and now we are within the month that made the all-time high. So 5 days left. Large rejection wave to the upside on the monthly. Are you expecting gold to come down all the way below the open to make it a bearish candle, or is it more likely that we start trading around the levels right here or in a doji, right? Either way, not expecting this to be broken through, so I do expect this fair value gap to form, right? So this is our current dealing range right here. I'm just taking out highs and then not really doing much, right? So to be honest, last week when I saw, last month when I saw this large wick, I was pretty sure that we were gonna come down to discount to go higher again, but obviously we didn't do that. We just kind of, broke and made a new all-time high. So it is what it is, right? So not much on the monthly as of now. Let's just drop down onto the weekly time frame. So here on the weekly, we have a bit more information, right? I am still bullish on gold. I don't think as of now there's any sign for me to be long-term bearish on gold. I think every bearish move now is really just a pullback into discount before going higher, right? So unless something like this gets taken out right here, I am not bearish on this pair at all, right? So last week took out all-time highs, strong rejection lower, indicating a lot of profit taking up top here, which is what caused this strong rejection lower. Now, I did say I was bullish, right? However, it wouldn't be weird seeing this rejection to see price come lower into discount to go higher, right? The only issue is that we did not close beneath the previous, this weekly low right here, right? We merely wicked it. And then if you look closely, this is an order block, right? Because this is the last down move before the up move that had an imbalance as well from, previously from this high to this high, we had an imbalance which has now been filled right here, but this is still a valid order block. And if I take a fib from the open, from the high of this order block down to the low, price is also rejecting off and failing to close beneath the mean threshold right here, right? Which is what is edging me towards the fact that we might see higher prices again for next week. And this entire thing was just profit taking or a reaction from taking out that previous all-time high right here. So if we do come lower, I am expecting us to just use this as support, continue higher, right? So still expecting a bullish week on gold. Let's see if the daily lines up, right? So currently on the daily, this is that all-time high, current swing low, swing high. This is that origin of that impulse move right here. This is the origin. So this is currently that range, and we are within discount of that range. So last week, Monday took out liquidity, Tuesday showed indecision, and Wednesday, boom, violation of this this bullish fair value gap, which some may have seen it as a potential resistance to come down lower, right, as in this inversion. But the thing with gold is that once it really goes like this, it really just goes. So technically you would have been fine looking for shorts on Thursday, right? Maybe not, maybe Wednesday, maybe Friday as well. But yeah, Thursday was these 2 days were the large movers in the market right here. So on the daily, right? Like, so let me recap. So weekly, still expecting bullish prices because of the order block respect, as well as failure to close beneath this previous low. So, So moving down to the, let me see how long I'm recording, 18 minutes. Wow. So moving down to the daily, right here, we do have a few roadblocks to be wary of, because these are balanced price range, right? Because imbalance fueled by another imbalance, imbalance fueled by another imbalance, right? So balanced price range. So once this fails, you should be okay looking to take longs into this if this fails, right? But as of now, we are within discounted pricing. We are within a bullish fair value gap, which also has an order block beneath it, which also has a breaker block right here, right? So a lot of things lining up right here. See how we don't close beneath the 50% of that, or that breaker block, right? So low, high, lower low, higher high, breaker block, and also that mitigation block, right? So all of these things are lining up within this area of interest right here, right? So we could well and see price come down, take out previous week's low, come into in this order block right here to continue higher, right? That would be the ideal scenario for me looking at gold, right? And pulling out the my bad. Pulling up the econ calendar, right? Even though gold may move irrespectively to this, because gold is a commodity and sometimes it kind of goes its own way without even needing this. Ideally, I want to see the low being put in before Wednesday, taking out some liquidity, and then reversing higher into the market like that for next week, right? So gold is a bit cleaner compared to the dollar index, right? I'm still bullish on it until I see some more structured gold. Then I might switch short-term bearish on a daily and a pullback phase on like the weekly or the monthly, basically. So yeah, so that is it for gold. A bit quicker on gold. I tend to spend more time on the DXY because I know like many people trade forex, right? So most people trade the major pairs, and if I can get the DXY right, they just have to cross that with their cross pairs, right? So USD CAD, AUD USD, pound dollar, cable, euro dollar. So I tend to spend a bit more time on the DXY because it can cover many different things all at once. And a pro tip is that if you don't know what pair to trade, right? So for example, you trade EU and GU, right? But you don't know which one to trade. You can use EG to kind of decide which one is stronger or weaker and correspond that with the dollar index, right? So if bullish dollar, you should be looking for weaker currency pairs, weaker foreign currencies. So things like a weaker GU or a weaker EU, and you can kind of use that to determine which pair you want to trade. And if the dollar is ranging and EG is ranging as well, so everything is pretty much equal, which is quite rare, but it does happen. You could look at forex futures, right? So things like 6E, 6C, right? You can, I'm not sure if I can pull it up right here, but how do I go to the, so like things like 6C, CAD futures, 6E, Euro FX futures, right? So you could use that to kind of see which pair is giving you, which might give you a better move comparatively, since everything else is ranging, right? So, well, I'm waffling a lot right here, but all right. So last pair, US500, also known as the S&P 500 for most people. Current monthly swing low, monthly swing high, impulse move that broke this high. And why not this low and this low? Well, because this is an obvious pullback before the break. If we didn't have this, then I would probably take this low. But since we did have this pullback, this is an obvious pullback before the break. So yeah, this is that range. So still pretty near to all-time highs, still bullish as well on indexes, right? Until we see a shift, I'm not going bearish on this pair at all, not even into discount pricing. So we're within this monthly fair value gap. Price formed it, came it down, filled it to the brim, and now we are retracing up, expanding higher, taking out this previous all-time highs, right? So nothing much on the monthly. Let's drop down to the weekly right here. So this is that weekly range, right? So swing high, pulled back, really obvious pullback too, swing low, broke this high. Now we are currently forming that new all-time high, right? So seeing how last week closed, we failed to wick above it. I mean, close above it. So we wicked above it, and then we closed with an indecision. So from that we formed this bullish fair value gap. So based on this candle closure alone, right, we might be expecting the market to pull back lower into this fair value gap for next week at least. But because it is quite equal on both sides, I can't really have a clear bias, but just based on how we wick this level, we might come down lower to retest this fair value gap, or maybe if this fails, then use that as an inversion to come down lower into discounted pricing or these fair value gaps right here, right? So based on this, I'm still bullish, but we could see a pullback lower into this fair value gap to then push higher, right? So that is my outlook on the weekly. The daily, as of now, right? So this is that current low, high. We haven't formed a high yet because I need more candlesticks to print to pull back, showing me that this is the actual range, right? So as of now, still within that daily bullish fair value gap. We had this big rejection after taking out all previous all-time highs right here, right? So once you see this candle, you could kind of predict that the next day might look something like this into these lows right here at least, and we took them out, displaced to them quite aggressively. So as of now, still bullish, right? But we might come down lower into that weekly fair value gap right here, so keep that in mind. But based on how we closed on Friday, we do have a swing low being formed here. So I want to see how we trade early on in the week, right? So if I want to see price go lower to retest this, I would ideally prefer an open high, low, and close, right? So where could we find resistance? Well, we have this really long wick, which is a potential rejection block. So keep in mind of this open and the 50%. If I were actually bearish on the market next week, I don't want it to push and close aggressively above the mean threshold right here, the 50% mark. So having that in mind, if we do trade lower into that weekly fair value gap on the weekly, and also coming to lower into this bullish RDRB, right? Delivered rebalance, such a tongue twister. But either way, depends on where we trade early on in the week, which is why I don't prefer to trade Monday, because I would like to consider Monday kind of like a void, right? I use it to confirm my bias for the week. If we trade down first, we might trade higher later on. If we trade higher first, we might trade lower later on. So I stay off Mondays because Mondays is also the smallest range day on average, right? And I think I hit my mic, my bad. And I use Tuesday to confirm Monday or my bias, and I should like to see the opposite end of my bias being put in before Wednesday. So if I'm bullish on this pair for that week, I want to see the low being put in around Monday to Wednesday, right? And Wednesday we could see that mid-week reversal pattern, which I really like. So yeah, that's pretty much it for this video. I've been waffling for a long time. I think this is my longest video up to date, surprisingly, even though I said I'm sick. But yeah, that's pretty much it. Yeah, I hope you guys have a good one. Remember to stay safe, protect your capital, and trade on days where bias is clear. I'll catch you in the next one. Peace out.